Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about what is the law of large numbers and how does it affect traders. All right, so this concept is actually very paramount, it's very important for all trading strategies. All right, so because it affects so much of even trade management and risk management. All right, so what the law of large numbers essentially is that it has a theory that you need over the short term. So there's the law of almost a law of small numbers and the law of large numbers. Right. So for example, if you have a coin, right? If you have a coin, and a coin have two sides, right? There are heads and there's tails. There is literally, right, essentially a 50% chance that you will get heads and a 50% chance that you get tails each time you flip it. Okay. Now, if you go ahead and flip it 10 times, right, there's a chance that there's a very high chance, right, that you will not get 5 heads and 5 tails. You'll probably get something like maybe 7 heads, 3 tails, or 7 tails, 3 heads, right, or maybe sometimes even like 8 heads and 2 tails. All right, so the number will not be 50-50 over the short term, okay? But if you did this like 1,000 times, right, then there's a high chance that you might get roughly 500 hits and 500 tails, right? The deviation from the mean, right? So the deviation from 50-50 will be smaller over the law of large numbers. But if you're doing it, for example, just 2 times, right? You look at the coin and say, yeah, you're 50-50, right? So you know what? If I flip it twice, I should get 1 hits and 1 tails, right? You can try it, and I can almost guarantee you, most of the time you might get like 2 hits or 2 tails instead, right? It's very rare that you're going to get 1 hit and 1 tail right away, all right? And this is the concept of the law of large numbers. Now, how does this affect traders? Okay, how this affect traders is because your trading strategy requires the law of large numbers to work itself out. Firstly, if you're backtesting your trading strategy, right? MT4 has a backtester, MT5 has a backtester. I think it's a strategy tester, and you can test your trading strategy and see how it does. The first thing you have to look out for is that you need a decent amount of trades, right? You can't run a backtest and over one entire year, and maybe you have a 90% hit rate. You're like, wow, I have found the holy grail, right? I have a trading strategy that gives me a 90% hit rate. Then you realize it's only over 10 trades, right? So sorry to pop your bubble there, right? It'll be better to exercise caution when you want to use this on the live markets, because this is still a small number of trades. Now, would you be a lot more confident if you realize that over the past year, right, this trading strategy did 1,000 trades and 900 of them were profitable, like 90% hit rate? That'll give you a lot more confidence than having just 9 out of 10 trades as profitable. So the first thing, the law of large numbers affects it when you are looking, when you're backtesting a strategy, right? So it's very important to ensure that you have a big enough number of trades. I usually go for something above 100. It really depends, right? It really depends on your time horizon, right? So if you're doing a month-to-month kind of a backtest, right, you probably want to look for a little bit more trades, right? Even 30, 40, 50 trades per month would be good, right? If you have like 3 trades per month and you want to use that, if you want to use like that high hit rate based on 3 trades per month to backtest your strategy, it will unlikely work well. Remember, the key is like the bigger the number, the more trustable, the more usable, the more confidence you can place behind the numbers you're getting for your strategy, right? And the second thing is that you might have a good strategy, right? Let's just say you have tested your strategy, and over 100 trades, over 1,000 trades, you have a 70% hit rate, which is pretty good. Good risk reward of 1:1. You got 70% hit rate, and you're thinking, all right, I'm going to use this trading strategy. I'm going to trade the market, right? So once you start trading the market, you're like, I'm going to get it right 7 out of 10 times, right? So I might as well risk 10% per trade, right? So you get a little bit greedy. You start putting into pretty large positions into your trade. Now, this is where things can go wrong. You might be right 70% of the time, but that is also over the law of large numbers. That means, you can consecutively make losing trades. Like 5 losing trades would cause you to be down 50% of your account. All right. If you are risking like 10% on each trade, it roughly take you down 50% of your account, right? So that is the danger, right? Is that even though you have a good number of, a high hit rate, you still need to exercise proper risk management. And the answer to it rather, is to risk somewhere between 1 to 3% per trade, depending on how nice the setup is, right? Don't go, too big, risking 10% per trade. Some people even say 5% is a little bit risky. Yeah, because, it just takes a couple of losing trades. That 30% it doesn't turn out. Because, we've seen it, right? You can have a 50-50 heads and tails, but you might get 5 consecutive tails and 5 consecutive heads, right? So it's the same thing if you're trading strategy, right? Just because you have a positive expectancy, right? Maybe a 70-30 or 60-40, that does not mean that you can just throw risk management out the window. The trick of lasting the long run, right, is to use smaller amounts per trade, right? So you risk 1 to 2 to 3% per trade, and then that allows you to really see the law of large numbers work itself out in your favor, right? You need to be able to last the long run in order for the law of large numbers to work. If all your trade is all banking on a single trade working, or the next 5 trades to be successful, right, then the law of large, you're not giving your strategy the best chance to survive based on the law of large numbers. All right. Anyway, guys, that's it from me for today's podcast on what is the law of large numbers and how does it affect traders. Do remember to subscribe to our podcast. As here at IronFX, we're dedicated to bringing you the very best trading education to take your trading to the next level. Until then, stay safe, trade safe, and peace out, guys.